Tariff costs are becoming unsustainable for automakers. That's what one of the largest dealership groups warned on an earnings call on February 18th. Automakers will either have to raise prices or cut features.
Prices are going up. There's no question that you're going to see that. They're not going to sit back and lose billions and billions of dollars. They can't. It's just not going to happen.
To give an idea of how tariffs are affecting car makers, consider Toyota, the world's largest. U.S. sales rose 8% in 2025. It was its best year since 2017. Its luxury brand Lexus hit a record. Sales climbed worldwide too. But 9 months into its 2026 fiscal year, U.S. tariffs cost the company 1.2 trillion yen. That's almost $8 billion. Profits have fallen 25%. About half of the cars Toyota sells in the U.S. are made here. It has 11 factories making parts and vehicles across the country. But some of its popular and high-priced models are made elsewhere, like most Lexus models except the TX crossover. The Tacoma pickup, the best-selling mid-sized truck in the U.S., had its best year on record. It's made in Mexico. Right now, trade rules place a 25% tariff on all foreign-made parts in a car built in Canada or Mexico. Cars and parts imported from Japan carry a 15% duty. Sam Fiorani, an auto industry forecaster, told me that to offset the effects of tariffs, Toyota can invest in U.S. suppliers, but it can't move Tacoma production to the U.S. right now. The automaker even told me that all its U.S. factories are at full capacity. Toyota has been on a U.S. factory spending spree. It opened a nearly $14 billion battery plant in North Carolina in November 2025, pledged another $900 million for hybrid vehicle production, and said it plans to spend $10 billion in the U.S. over the next 5 years. For now, Toyota is so profitable that it is still targeting a margin of about 7.6% for the full year. But without the tariffs, margins would probably be above 10%. Toyota told me that the 25% tariff on Canada and Mexico is highly disruptive and cannot be sustained, and warned of higher prices and less choice. It's also worth noting that the tariffs are also costing US-based automakers billions. US vehicle prices are already, on average, just shy of $50,000. Dykes said Sonic's average retail sale price in the fourth quarter was $62,000, an all-time record high. My colleague Mike Whalen just wrote a story about how new cars are becoming a luxury good. If this continues, as Dykes said, buyers shouldn't expect any relief. Some analysts point out that so far, car prices, while high, have remained relatively flat overall throughout the last year or so, suggesting automakers haven't raised them drastically in response to the tariffs, as many had expected they would.
The affordability issue, while maybe not being felt in 25, we believe as you get into May, June, July, August, you're going to start feeling it as new car prices have nowhere to go but up.